Welcome to the Wealth Wisdom, where knowledge becomes power and power builds your future.
Imagine a tech powerhouse with a track record of shaking up industries, battling giants like Intel and Nvidia, and dominating cutting-edge markets like AI, gaming, and cloud computing. That's AMD Advanced Micro Devices, a name synonymous with innovation and bold market moves. But here's the real question. With its stock price sitting where it is today, is AMD the opportunity of a lifetime or just another hype train running out of steam? If you've been eyeing AMD, you're not alone. The tech sector is buzzing about whether this silicon titan is poised for a meteoric rise or due for some growing pains. Recent market shifts, competitive breakthroughs, and some surprising earnings reports are painting an intriguing picture. But is now the perfect time to jump in? Or is the risk too great for the reward? Today, we'll break down AMD's current standing, analyzing the numbers, the competition, and most importantly, the potential. We'll look at why analysts are divided and what the data really says about AMD's future. But it's not just about stats and charts. Behind every great investment lies a story, and AMD's story is nothing short of fascinating. From its underdog days to its rise as a leader in high-performance computing, AMD has redefined what's possible in the tech world. Could this be the company that reshapes your portfolio? Stay with me, because by the end of this video, you'll know whether AMD is the golden ticket to your investing dreams or a tech trap waiting to spring. Let's dive in and uncover the truth about AMD stock right now. Let's talk about AMD, the company that always seems to be in the spotlight, especially when people feel like they've missed out on Nvidia. If you missed Nvidia, just buy AMD, right? That's been a common mantra for years. But does it actually make sense today? We're breaking it all down. Here's the thing. Nvidia has been growing at an incredible pace, even at its massive size. Meanwhile, AMD, despite being a strong competitor and often seen as the number two player, hasn't grown as fast as many expected. It's also not as profitable as some investors hoped, especially considering the premium its stock commands. So is AMD truly the consolation prize? Or is that just a narrative we've accepted without questioning? In this video, we'll dive into the numbers, compare these to tech giants, and see what's really going on with AMD. Here's a quick preview. AMD stock has struggled this year. It's down nearly 7% year to date, despite an early rally where it gained over 40%. Talk about a roller coaster. So what does this mean for investors right now? Is AMD an undervalued gem waiting for its moment, or a stock struggling to keep up? Let's take a closer look at AMD's current position in the market. AMD currently has a market cap of around $127 billion, bigger than Intel, but still far behind Nvidia. So where does that leave it in terms of valuation and growth potential? At first glance, AMD's forward price to earnings ratio of around 30 times might seem high. You might think that's expensive, but don't judge too quickly. There's more to the story. When we factor in the price to earnings to growth ratio, the valuation starts to make more sense. Here's why. Analysts expect AMD's earnings to grow at a blistering pace By fiscal 2025, bottom-line earnings are projected to rise more than 50% year-over-year, while revenue is forecast to grow by about 27%. That is a powerful combination. Strong profit growth paired with healthy sales growth, exactly what investors love to see. So while the P/E ratio may raise eyebrows, AMD's projected growth rates suggest the premium could be justified. But does that mean AMD is undervalued relative to its potential? Or is the competitive landscape still too risky? Let's break it down further. Looking ahead to fiscal 2026, AMD's growth story continues. Earnings per share are expected to outpace revenue growth once again. This trend, where profits grow faster than sales, is an encouraging sign for long-term investors. Now let's talk about market expectations. The average analyst price target for AMD stock suggests roughly 35% upside from today's levels. That's significant if those predictions play out. Digging into valuation metrics, AMD's forward PE and EV to EBITDA ratios are both below their 5-year averages, suggesting the stock is trading at a discount relative to its historical norms. Its price-to-sales ratio is roughly in line with its 5-year average, but the price-to-free cash flow metric looks elevated. That's largely due to weaker free cash flow over the past year. However, analysts expect a major turnaround in free cash flow in the coming years, and that could be a game-changer for AMD's valuation. The PEG ratio sits around 1.7, which is compelling and suggests AMD may be undervalued relative to its expected growth. Now let us take a deeper look at AMD's free cash flow, one of the most exciting parts of its growth story. Over the last 12 months, AMD generated about $1.56 billion in free cash flow, but projections show free cash flow more than doubling in fiscal 2024. And the momentum doesn't stop there. Forecasts show growth of around 86% in 2025 and another 37% in 2026, potentially reaching close to $9 billion in free cash flow. So, what's driving this explosive growth? The answer is simple: data centers. Since 2020, AMD's data center revenue has skyrocketed, while gaming revenue has seen more modest growth. And data centers matter because they're highly profitable. We've already seen this with Nvidia. Demand for data center chips continues to soar, driven by AI, cloud computing, and enterprise-level workloads. AMD is leaning into this trend, and it's paying off. When we compare AMD to its biggest rivals, Nvidia and Intel, the differences are clear. Nvidia dominates with gross margins around 75%, putting it in a league of its own. Its free cash flow has exploded since early 2023, reinforcing its leadership. AMD isn't there yet, but its free cash flow trajectory is improving rapidly. That brings us to a popular narrative: if you missed Nvidia, just buy AMD. Historically, this argument didn't hold up. If AMD were truly right behind Nvidia, we would have seen consistent free cash flow growth much earlier. But for years, Nvidia surged ahead, while AMD lagged, not slightly, but significantly, in technology execution and market share. However, things may finally be changing. AMD's accelerating data center growth and improving profitability suggest it could become a more legitimate competitor. Now compare that to Intel. Intel's free cash flow has turned negative, weighed down by massive investments and operational struggles. Just a few years ago, Intel generated more free cash flow than Nvidia and AMD combined. Today, it's fighting to stay relevant. AMD's data center segment is on fire, with triple-digit year-over-year revenue growth and massive jumps in operating income. Other segments are mixed. The client segment is growing steadily. Gaming revenue remains weak due to limited console refresh cycles. The embedded segment is improving quarter-over-quarter, but still soft year-over-year. Now let's talk about a critical factor shaping AMD's future: supply chain dynamics. Both AMD and Nvidia rely heavily on TSMC. Reports indicate Nvidia has secured a majority share of TSMC's advanced capacity for 2025, giving it a massive advantage. This could limit how fast AMD can scale, even if demand is strong. Nvidia has made it clear if they had more supply, they could sell more. For AMD, the challenge is securing enough capacity to keep pace. AMD CEO Lisa Su has addressed this directly, emphasizing that AMD has been ramping supply and securing capacity across the chain. While supply constraints will likely remain in the near term, AMD expects meaningful growth in 2025, especially for its high-performance GPS like the MI300 and MI3-5. Execution will be critical. AMD must deliver consistent quarter-over-quarter growth to justify its valuation. Now let's talk numbers. Based on trailing 12-month free cash flow, the market is pricing AMD as if it will grow free cash flow at roughly 29% annually for the next decade. That's a high bar. But if we use projected 2020 for free cash flow as the base, the implied growth rate drops closer to 18%, far more achievable. If AMD delivers on projected growth for 2025 and 2026, it could exceed market expectations much sooner than investors realize. Finally, let's look at the technical picture. AMD's chart isn't perfect, but it's not broken either. The stock is still making higher lows, which supports the long-term uptrend. There's resistance overhead, and a breakout may take time, possibly after the next earnings report. As long as AMD holds above key support levels, the risk-reward remains attractive for long-term investors. So the big question remains, is AMD worth buying today, or do you prefer Nvidia, Intel, or other players like Broadcom or Qualcomm? If you enjoyed this analysis, don't forget to like, subscribe, and stay tuned for more. I'll see you in the next one.